Our core product is pay-per-use financing, where customers don't pay us a fixed rate every month, but rather just pay us when they use the equipment, which we deliver to them. Yeah. And the big benefits that customers gain from that are one, you are converting fixed cost into variable cost. So when you take out a traditional loan or you lease an equipment with a traditional leasing company, you have a fixed liability for the next 5 or 7 years. And you have fixed cost. When you finance it with us, you have variable cost. And so you don't have this fixed liability, and only when you use the equipment, when you generate revenues, that's when you also have a cost attached to it. And that's a very attractive proposition. We, as a company, we try to be very agile and adapting to these changes. And I think this is what makes the business very interesting and is one of the pillars of success. In terms of leadership philosophy, I don't think it's that different from when you run a business in other companies or industries. Ultimately, I think it's really important for everybody in the company to understand where the business is heading and what the goals are, and to make sure that everybody is behind those goals and we pull together as a team to achieve these goals. An increasing number of corporate customers have been looking for more innovative new ways of financing equipment, specifically usage-based financing, where you don't pay a fixed leasing rate every month, but you pay only when you use the equipment that you operate. At the same time, you have manufacturers of equipment who are looking for financing solutions for equipment as a service propositions, where they offer to their customers to deliver the equipment as a service. And again, the customers only pay when they use the equipment. And what all these market participants found is that none of the existing finance companies really offer that, and that it's very, very difficult to develop any new solutions or new ideas with these existing companies.
Hi everyone, and welcome to Tech Talks with TFN. And this is Akansha Dimri, the founder and editor-in-chief of Tech Funding News, where we cover startups, innovation, and investment. And today we are speaking with Peter Oser, who's the co-CEO at Linxfour, a Vienna-based startup redefining industrial and equipment finance through its pay-per-use model. We'll dive into his journey, how Linxfour is scaling across Europe, and what's next for fintech innovation in the industrial space. Thank you for waiting for this, Peter, and let's begin this conversation. How are you feeling today?
Yeah, I'm feeling great. Hi, Akansha. Thank you for having me, and very excited to share some thoughts with you.
That's great. And I think let's begin this episode with a brief introduction about yourself. So please, could you share a bit about your background, how you built your career? And it is literally on the intersection of finance, innovation, and industry. So yeah, what drew you to Linxfour and its mission to reinventing equipment financing?
Yeah, great question. Thank you. So I started my career many years ago in London, working for various investment banks in the credit and fixed income markets. And within these banks, as well as later on, I soon got involved in building businesses within the banks or business divisions. And I left banking in 2012. As the industry was becoming a bit less dynamic than it had been before the financial crisis. And I started a life insurance business in the UK, which we set up over the course of about 2 years. And then in 2014, I joined the private equity-backed life insurance company in Germany, which we built up from scratch through a buy and build strategy. And after having worked intensely for more than 20 years, I decided to take a sabbatical and take a career break in 2020. Spent some time with my 4 kids. And during that time, I made several investments into startups and businesses I felt were really exciting and interesting, and where I could add some value with my experience and background. And one of these companies was Linxfour. I found the original ideas that the founders had, that I'm sure we'll talk about in a minute, very fascinating and interesting, because they were solving real customer problems. And it also seemed like a really interesting industry that had not changed that much over many years, and was ready for some new ideas. So I invested into the company as a seed investor together with several others. And then as the business developed, the founders were asking the investors for some input and help and advice on building up the business, which I offered happily at the time. And at some point, they asked me if I could step in and co-head the business together with one of the founders. Ultimately, the founders left us, but we kept building the business, and I'm very happy to run it now together with my colleague Cyprian, who joined us originally as CTO and is now running the company together with me. And yeah, it's been a very exciting journey, and happy to tell you more about it.
That's quite a story, Peter. And as CEO, what's your leadership philosophy for Linxfour to guiding the company in such a fast-changing industry?
Well, so I'm not sure the equipment finance industry is changing that fast, but certainly the world around us is changing very fast. And we as a company, we try to be very agile and adapting to these changes. And I think this is what makes the business very interesting, and is one of the pillars of success. In terms of leadership philosophy, I don't think it's that different from when you run a business in other companies or industries. Ultimately, I think it's really important for everybody in the company to understand where the business is heading, and what the goals are, and to make sure that everybody is behind those goals and we pull together as a team to achieve these goals. This is, I think, what's really important. I think it's obviously, should I say, a luxury to have a small team in a startup, where you don't have a lot of bureaucracy and processes. At the same time, you have other challenges compared to working in a big company. But so far, it's been a lot of fun. I think we have a great team, and I think we've had some really, really exciting successes recently.
How big is the team right now?
So we are right now 10 people. It's a pretty diverse team. We come from, I think, 7 different countries, so all different backgrounds. Most of the team sits in Austria and Vienna, but we never saw ourselves as an Austrian company. We always consider ourselves to be a European business. We finance projects across Europe. We've transacted in more than 10 countries in Europe right now, and we are continuously expanding. Some of us sit in Poland, others in Spain, so it's pretty diverse.
That's interesting. And how did you meet Kinled and the other VCs who are involved?
Yeah, so what was really interesting during our fundraising processes was that we obviously spoke to the usual venture capital firms, but we also used my network and my co-investors' networks quite a lot, and that obviously extends to many financial services firms, banking professionals, people that have worked in financial markets, people that understand credit markets. And what we found was that we often found it challenging to explain the business to traditional venture capital funds because of the metrics they look at, and because I would say it's unusual to have startups in an area that involves balance sheet risks, credit underwriting, asset management. Also, when people think about fintech, it's very often about payment businesses, consumer-facing businesses, but not the kind of stuff that we do, which is more similar to traditional financing. But obviously, we do it with a high focus on technology and innovation, and so ultimately we ended up always raising money from very experienced either finance professionals or people with a very strong industrial background. Because whenever we explained the business to them, they got it immediately. They very quickly understood the opportunity, and we found many great investors that got very excited about the business and still are. Whereas, yeah, traditional VC funds was not that easy. And so we have a very interesting investor base now, and Kinlet is a key investor. We have introduction happened through mutual contacts. So that's how I met Kinlet, and yeah, it's been a great journey having them on board.
That's some story, and I just want to understand more about Linxfour over here. What is the biggest problem that you are solving in equipment financing?
Yeah, so the idea behind Linxfour, the original idea was that if you look at the equipment finance market, it's a huge market. It's $1 trillion market. The majority of industrial equipment that
In
companies
Europe.
worldwide, but obviously in Europe as well. Yeah? So it's a worldwide market, but it's very big in Europe as well. And the majority of industrial equipment that companies use is financed via leasing. And it's a very traditional market. It hasn't really changed that much in the last 20 to 30 years. It arrived in Europe, I would say, in the late 80s, 90s.
What are the biggest player in equipment financing? Which
So the biggest players are companies like Deutsche Leasing or Société Générale Equipment Finance. So, leasing companies that are related to banks. Sometimes they're independent, but it's also a very fragmented market. So if you look at Germany, which is the biggest market, you find a lot of regional players, a lot of family-owned businesses, a lot of specialized leasing companies. And all these businesses, if you look at them on average, they've made a decent return over the years. They haven't really suffered big credit losses like you would find in real estate or in other areas. So it's a market where I would say a lot of companies are grinding on and doing reasonably well, but very little innovation has happened there over the years. Yeah? And what we found when Linxfour was started was that an increasing number of corporate customers have been looking for more innovative new ways of financing equipment, specifically usage-based financing, where you don't pay a fixed leasing rate every month, but you pay only when you use the equipment that you operate. At the same time, you have manufacturers of equipment who are looking for financing solutions for equipment as a service propositions, where they offer to their customers to deliver the equipment as a service. And again, the customers only pay when they use the equipment. And what all these market participants found is that none of the existing finance companies really offer that, and that it's very, very difficult to develop any new solutions or new ideas with these existing companies, because it's not standard. It's a new proposition. It's outside of their normal business, and this is precisely the problem that we want to solve. Yeah? So what we offer our customers, and this is our core product, we do other things now as well, but our core product is pay-per-use financing, where customers don't pay us a fixed rate every month, but rather just pay us when they use the equipment, which we deliver to them. Yeah? And the big benefits that customers gain from that are, one, you are converting fixed cost into variable cost. So when you take out a traditional loan or you lease an equipment with a traditional leasing company, you have a fixed liability for the next 5 or 7 years, and you have fixed cost. When you finance it with us, you have variable cost. And so you don't have this fixed liability, and only when you use the equipment, when you generate revenues, that's when you also have a cost attached to it. And that's a very attractive proposition. And the second thing is that's very important for larger businesses. When you enter into a traditional leasing financing transaction, even though you do not legally own the equipment, but the lessor owns the equipment, you still have to book a liability on your balance sheet for the future payments you have to make under this lease. But if the lease is variable and you only pay for the equipment when you use it, then that is not a liability on your balance sheet. Yeah? And this is very important for a lot of larger listed companies that don't want to excessively grow their balance sheet by investing into new equipment, even though they need the equipment, or they want to replace old equipment and replace it with more energy efficient equipment. And so that allows them to do that without increasing their balance sheet excessively.
That is amazing. I mean, equipment as a service, and you're also basically financing it. So, and then you're trying to break it into large financing companies and then SMEs. So, what's your focus mostly? Is it SMEs or the larger firms?
It's both. It's SMEs. Yeah, for which we finance individual machines starting at 500,000, maybe up to 3-4 million. That's 2-3 machines. But then we also finance large projects for big multinationals where you maybe have 100 million investment into a new factory. And that is a big CapEx where it can also make a lot of sense to finance that on a pay-per-use basis. That is another option for us. So we have these two business segments. On the one hand, smaller transactions with typically SMEs, and then you have large projects that obviously are a little bit more complicated, require more diligence in underwriting, slightly different refinancing structure, but we essentially do both.
Got it. And in today's world, AI and AI infrastructure has become so important. How much AI integration is there in Linxfour and its products?
Yeah, so I can see two opportunities for AI in our business, and both are related to the underwriting of the equipment. One is obviously but when we underwrite transactions on a pay-per-use basis, we need to understand what is the utilization risk of these machines. What's the volatility of how much these machines are going to be used. And so as we grow our database of machine utilization data, this will become very interesting to use AI to develop conclusions from that as to and predict how much these machines are going to be used. At the moment, our data set is not big enough yet for this to make sense, but ultimately this is a step that we will take as we grow bigger. The second thing is on the credit underwriting side, I think there are a lot of opportunities to apply AI models, but that is not something that we would do in-house. I think there are enough other specialist providers out there that do that. But when you think about how credit underwriting is done today, it's still quite manual and unsophisticated in many ways. And I think we will see a lot of changes there in the coming years. And we, as ultimately an asset manager of credit and equipment risk, we will benefit from those changes, as will others.
I know Fintech is a segment which I feel needs so much AI transformation, but at the same time, people are very scared of it because money is involved. So, what are the challenges, scaling challenges, or maybe adoption of technology as a challenge in traditional industries and Fintech in Europe?
Yes, I think one challenge for us is the whole regulatory environment that we operate cross-border in different countries across Europe, and the challenge that results from that is that there are really a lot of differences in regulatory regimes between different countries. I would say, that makes scaling up in Europe for any business that operates in a regulatory environment very difficult. In some areas, regulations are more uniform, and others less. But certainly in financial markets or in equipment finance, it's a very inhomogeneous environment. And you don't have any uniform regulation of leasing in Europe. And even in areas where there are EU directives, for example, if you take anti-money laundering, which applies to a lot of businesses, not just us, there might be an EU directive, but then every regulator interprets, first of all, every legislative incorporates these directives slightly differently, and then every regulator has a slightly different interpretation. So then for us as a business, what that means is every time we go to a new country, we still have to hire local legal advisors to ensure that we are fully compliant with the way the local regulator interprets the laws, and that makes it very cumbersome and very costly. And so if I had a big wish, that would be to get rid of all this national regulation and centralize everything in Brussels without room for interpretation, because as a business, you want to know what the rules are. And if they're slightly different, if there's an intention to unify it, that's nice. But if in reality they are slightly different in each country, it's a real challenge, and it costs a lot of money. And it really, I think, prevents businesses, not just us, from scaling up in Europe and accessing that whole market at once.
I completely agree. I mean, legal and compliance are something which AI can really transform. I mean, if I get a legal lawyer which is like accurate in AI, it would help in media also so much. But I think we are reaching somewhere, and in years to come it would happen. But coming on to you're a seed investor also, you mentioned, and how do you think is the fintech landscape in Europe right now in terms of investment landscape?
That's a good question. I don't have a strong view on that, to be very honest. Yeah, because I'm very busy building Linxfour, so I don't spend a lot of time looking at other fintech businesses. I think, as I said earlier, fintech in Europe is a lot about payments businesses, consumer-facing businesses. Obviously, there's some huge success stories like Revolut or Klarna. Otherwise, I think there's not that much going on, to be honest.
Let me reframe the question. So, what's your perspective on an investor appetite for capital-intensive, for data-driven startups like Linxfour?
I think it's challenging right now. At least that's what we found. Ultimately, we have been able to find investors that are looking to really make a big difference and help us scale up. But it takes time, and it's not as dynamic as you would find it in the US, for example, because there just generally is a lot of risk aversion, and there is, I would say, limited capital available that is prepared to step outside the existing paths of deployment. So I think, it's challenging, it's doable, but certainly it's not an easy environment at the moment. And I think there are obviously several macro factors that play a role in that. I think the general economic outlook is mixed, I would say. It's improving, but it's not like everybody expecting the economies to turn around and we have the boom times ahead. I think in terms of also intellectual capital and dynamic working environment, you have not a lot of places in Europe that are very suitable for startups, I think. So we operate out of Vienna, which is one of the most beautiful cities to live in, but I'm not sure it's the most startup friendly environment from a legal tax, work environment perspective. I think the greatest place to start a business in Europe is still London by far, despite Brexit and all the other issues, challenges that the country faces. So yeah, I think there are challenges, but that doesn't mean that things are not possible. And I think if you are persistent enough and if you have the right proposition, you can definitely be successful.
I understand your point. I was in Germany last week for a conference, and I met a lot of startup founders from Vienna, and I met a couple of female founders from Vienna as well who were working in ag tech and AI. So there were a lot of discussion about the challenges, and I asked them a question which I'll ask you as well. Do you think that you will be expanding your business in US? Or is it already there?
It's not there yet. We look at the US opportunistically. Yeah, I think there's a huge opportunity for us in the US, but obviously entering the market there comes with a high level of cost and resourcing. And we need to ensure that we first get our things in order and reach critical size in Europe. And so the way we have approached the US until now is that we've always said, if we have a large enough lead project there that could kick off the operations, then we will pursue it. But otherwise, we will wait until we've reached critical size in Europe. And now our focus clearly is on growing in Europe. The opportunity is big enough by far, but ultimately the US can be very interesting for us as well.
Yeah, that's great. And talking about more future, one milestone that you're particularly proud of at Linxfour so far?
One milestone that we're definitely very proud of is that we recently convinced a large investor to launch a European equipment finance fund with us, following the track record that we built over the last 3.5 years. And that's really the next big step for us to grow the business, deploy those funds, continue to build out the track record. But that is a huge milestone for us.
Yeah, that sounds amazing. Congratulations. And a quick fact about Linxfour that people don't know about.
Quick fact. So, as I said, we're based in Vienna, Austria, but we consider ourselves a European company, very international team. I think we are the most innovative equipment finance company in Europe. And we have some real solutions for customers.
Cool. And do you want to share any future goals or expansion plans or partnerships that are supposed to happen in 2026? I mean, this year has almost ended.
Yeah, so as I said, the big thing for us is to launch our first equipment finance fund, and the name and all the details about that is cannot reveal it officially yet, but this will be visible latest in 2026. And we're very excited to work on that right now.
Okay, great. And this is our last segment, which is a rapid fire, which we do with all the Tech Talks with TFN series episodes, people and profiles who join us. So one word that best describes Linxfour culture.
Agile, I would say.
Oh, that's perfect. Agile, yes. And biggest misconceptions about industrial tech startups.
You don't have to be an engineer.
That's true. You can just know nothing about anything and just be a good leader, right?
Well, you should know something, but you don't necessarily have to be an engineer.
I totally get that. I have a developer as well. I have no engineering degree.
There you go.
Yes, everything I've learned is through experience. Okay, next one. One leadership lesson you would wish you would have learned earlier.
A leadership lesson. So I don't know if that is something I wish I would have learned earlier, but for me, so one of the key things is really resilience, right? So when you start a business, never give up because you will be rejected so many times, but ultimately it's going to pay off. But obviously, don't be put off by rejection. That is a constant, and ultimately, success will materialize, I think.
Completely agree, totally agree. That's the test. Those who pass that test survive. Okay, and the last one. One advice for the CEOs in Europe who are building like pan-European startups.
Yeah, so I think this goes back to what I said earlier, or what you could maybe draw as conclusion from my comments on the European legal and regulatory environment. I would give the advice that it's best to start with one market, establish yourself there, and then sequentially add additional jurisdictions. We did it the hard way, so we started in many different countries immediately, but that is a difficult journey. We did it, but I'm not sure I would advise others to do the same.
Yeah, blows my mind completely. But thank you so much, Peter. This was an amazing conversation, and thank you for your time at Tech Talks with TFN. We wish you best of luck with Linxfour. You're doing something amazing, transforming the traditional equipment financing system. And yes, and thank you everyone who joined us for this very episode. This is Akansha Demri, the founder and editor-in-chief of Tech Funding News, signing off. I'll see you in the next episode very soon.